Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 23rd of January 2026. The first chart is the S&P ASX 200 index, the XJO. The market traded in consolidation and absorption mode all week within the range of the previous bar, effectively testing the market for supply. You can see the market created a reversal of type here and spent some time in consolidation mode. It pushed up, broke out above that level, consolidated again for a couple of weeks, pushed out again 2 weeks ago, and this week it's effectively traded in consolidation mode again, testing the market for supply. You've got the highs of the range coming through here, and I expect, given reasonable trading conditions next week, the market may attempt to move higher and possibly up to the highs of the range. The next chart is the mid-cap index, and you can see a similar thing this week, although it acted a little stronger than the parent index this week. There was no breakdown in this market. Here's the lows of the range through here. The parent index actually broke down here, spent some time in recovery mode before recovering up like this. This market didn't break down, it was stronger. Really all it did was spend this time in consolidation mode, and then it's moved up. This week, you can see the market tested for supply in a similar fashion to the parent index below the previous bar's close for some of the week before just floating higher and coming up towards the highs of the range like this. It's done a pretty good job overall. It's possibly leading the parent index at this point in time, just slightly. The parent index is being held back a bit by the financial sector, which don't affect this market anywhere near as strongly. This market may in fact attempt to challenge the highs of the range next week and push higher if trading conditions are favourable. The next chart is a small ordinaries index. This is another one that's moved higher in a similar fashion to the parent index. You can see the market tested for supply below the previous bar's close before moving higher in response. What's effectively happened is the market moves lower. It absorbs any supply that's drawn out. It's testing the market to see if there is supply being drawn out, and if there is, it'll push lower again and challenge those sellers. And if not, price floats up towards the end of the period being weekly in this case, and moves higher in response because selling pressure is low. In a similar fashion to the mid-caps, there was a reversal here, period of consolidation, a push higher, 1 week period of consolidation, and since then prices moved higher. Highs of the range were here. You can see that the market's moved above that level now. I'm doing a pretty good job, really. I expect this market will attempt to move higher given reasonable trading conditions again next week. This is the financial sector. They're kind of holding back the parent index at the moment while they sort themselves out. You've got the highs of the range up here and the lows of the range here where price is broken down. This is the market that pulled the parent index down, whereas the mid-caps didn't do so. The interesting part at the moment is this down bar. Price challenged it this week, challenged its lows, did move below that level, and it had the opportunity to move lower, but it didn't do so. It recovered, closed about mid-bar on decent volume, average volume, and recovered back above that important level, which is the lows of this down bar here. It's within the range. Here's the lows of the range down here. So this is a market that's attempting to consolidate. Whether it's going to be successful or not, we'll have to wait and see. It possibly will be, but at this point, the market has broken down here below this bar's low, which is forming the lows of the range, and the market did move up to that level. It was not strong enough to recover. Prices pulled back, and there's an attempt here now to consolidate. The opportunity was offered this week for the market to move down to the lows of the range when price traded below this down bar's low, and that opportunity wasn't taken. And that suggests there is buying support in the market. It may not be particularly strong at this point in time, but it was strong enough, or it was sufficient to sustain a push higher and a mid-bar close. That tells you that there is some buying support in this market. And you'll probably see this market attempt to move higher, probably up to the breakdown line here next week. I don't think it'll be challenged next week, but it may move up to this level, and that'll offer the opportunity to move higher at a later date. This is the metals and mining subsector, and after a period of consolidation through here, price has been pushing higher. Here was your breakout. There was a push higher, a week of consolidation, another push higher, another week of consolidation, and prices moved higher since then. There was some testing below the previous bar's close, testing for supply here, before the market pushed higher later in the week, and it did close just slightly above last week's high, which is more positive. So this is a market that's moved higher. It was probably wanting to consolidate after a couple of weeks of up bars, and it spent more time in consolidation mode this week than it did so pushing higher. If trading conditions are favourable again next week, I expect this market will attempt to move higher, at least to some degree. This is the ASX gold sector, and it accelerated higher this week with an increased spread on increased volume. This was a pretty strong push higher. You had a period of consolidation through here. Price did eventually break out. It wasn't a convincing breakout at the time. Pushed up to this level where there was 1 week, where there was a couple of weeks of consolidation before breaking out again last week. And this week there was no testing for supply. Price just accelerated higher with an increased spread on increased volume. This was a pretty strong move. Generally, what you see in markets which accelerate higher like this, once the momentum has eased somewhat, you'll get a period of consolidation in response, usually a narrow spread down bar closing mid to high on reduced volume. And the higher up in the range of the up bar the consolidation takes place, the stronger the market is. But gold's not actually trading in an orthodox fashion at this point in time. The gold price is really accelerating higher, so you may not see the market trading in an orthodox fashion. This is what you would expect in a normal market. We'll see if we get it. At this point in time, gold's not really trading in an orthodox manner. Gold is accelerating higher in an unorthodox way, so it's a bit more difficult to read as it's not displaying the normal principles you would associate with the market trading. This is the ASX energy sector. Perhaps the most interesting part of this chart at the moment. You had this down bar about 6 weeks ago on pretty high volume. It didn't quite test the lows of the range, which is a minor positive, because normally when a market gets that close to the lows of the range, it will actually come down and test that level, but it didn't do so. But this week, prices pushed above that bar's high. Now, it's not really a reversal. It's taken 7 weeks or 6 weeks, so that's a little bit long to call it a true reversal. But the principle remains the same. Prices moved above the point where weakness emerged from, which is here, the highs of this down bar. It's moved above that. It's left all this weakness behind. There's no more stale trading to the left. Prices effectively attempting to break out. And here's the level above here. So you can see the market's moved right up to that level. You may get a test for supply in response up in the higher part of that bar's range. This may only take a couple of days, or it may take the whole week, depending on what the market's doing overall. And then if that's successful and supply is found to be low, you may find that there's a challenge to this breakdown line in the background and price attempts to move higher. This is a pretty good move. There was no testing of the lows here, a minor positive, and prices moved above the point where weakness emerged from in the past, in the fashion of a reversal, although it's a bit difficult to call that a true reversal, it's taken a bit too long. The principle, however, is the same, and prices moved above that point where weakness could emerge from the left. You'll still have a little bit emerge up here, but this is where the real weakness has emerged from, and the volume is very high. It's moved above that level now, and that's an important factor. This offers the opportunity for this market to move up and challenge this level 9,000 on this chart here if trading conditions are favourable. I do expect there may be a test for supply early below the previous bar's close, but that may only be brief in a strong market. This is the healthcare sector, and price continues to consolidate sideways. It has looked stronger than weaker more recently, but it did so over here as well and failed. So we're giving it the benefit of the doubt. There has been signs of strength emerging. There's been no attempt to challenge the breakdown line above. The price is looking stronger than weaker over the last 5 weeks as it consolidates and potentially accumulates sideways. It was doing a similar thing over here, so you need to take it with a grain of salt. But at this point in time, the market is attempting to consolidate. It may prove that this is all one pattern here, but at this point, I'm treating it as two. One where the market attempted to consolidate and failed. You will note, though, that the thrust lower, if I draw it like this, is reducing. And that generally is an indication that, in this case, the weakness is starting to become exhausted. It's not as weak as it used to be, if you like. It was really accelerating lower previously. And now the thrust lower is shortening each time. That's generally an indication that the market's going to attempt to consolidate. You get the same thing as the market moves higher when a uptrend becomes exhausted or it runs out of energy and it needs to come back and consolidate. This is the reverse of that, if you like. The thrust lower is starting to shorten. So we'll just watch this one. There is some indication of strength building, and it may even challenge the lows of the range here, the breakdown line, and move up into this level. And if it did that easily, that might suggest actually that this is actually all one period of accumulation. But we'll just treat it as two at the moment and see how things move as time goes on. This is the industrial sector. It was a great chart until this emerged. Doesn't look like much now, but at the time, that's where the weakness came from. At the moment, price is trading sideways, but at the moment, this bar here is of interest. All the trading over the last 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months, all the trading's been within the range of that strong up bar. It does look like the market's going to attempt to move higher. There's a little pressing nature towards the upside here. This week, the market traded slightly below the previous bar's low just briefly. It had the opportunity to move lower. It didn't do so. It recovered back above that level. Volume was low. It is below average, and it was lower than the previous 2 bars. And that suggests that selling pressure is not strong in this market. There's an opportunity for price to move up to the highs of the range next week. I'm not sure if it's going to challenge that level, but it might move up to it this coming week. You've got the highs of the range overall up here. There's plenty of room to move. Lows of the range through here. So this is all happening within the range, if you like. But there's an attempt to consolidate and perhaps accumulate through here. And it's perhaps looking stronger than weaker at the moment. Although I have said that previously, and all we've done is move sideways. There was an attempt to move higher back here, and supply was drawn out, and price pulled back again in response. So take it with a grain of salt at the moment, but at this point, it does look more promising than it has done for a little while. This is consumer staples, and they look a little vulnerable this week. The lows of the range are through here, highs of the range through here. You can see the market did attempt to move higher this week. It failed. It's pulled back and closed right at or just below the previous bar's low. Volume was about average. It was reduced, but it was about average. So it was genuine trading. That looks a little weaker than stronger. You've got the breakdown line above coming through there. I think the market will come back and test the lows of the range for strength, probably in here next week. It's looking weaker than stronger at this point in time. And when price is heading down towards an important level, like the lows of the range, this level here, it generally will test it. It will come back, it will interact with that level, and you'll either see supply drawn out and price break down, or you'll see buying support emerge and a price will recover or show the first signs of recovery. So just watch that for next week. This is consumer discretionary, and it's starting to show some signs of life as well. The lows of the range were being built here and kind of adjusted down to this level. It's a little fine tuning. Highs of the range through here. Price traded back within the range of the previous bar this week. It did test the previous bar's low and rejected going lower and ended up closing mid-bar on almost average volume. It does appear that this market is beginning to show some strength. There's been the opportunity to move lower through here a number of times, and it hasn't taken that opportunity. And that is normally suggesting to you that there's buyers in the market and they're holding price up. They may not be pushing price higher at this point in time, but there's enough buying support in the market to keep price moving sideways and not break down. So I think the market may move up to the highs of the range in response next week. It'll either be up to that bar's high or this bar's high. I don't know whether the market really intends on breaking out, but I think this market may push up in response to this week's trading and just test the highs of the range for strength. This is the ASX property sector. Price traded down to the lows of the range this week, closing a little above the lows in the end. It tested the previous lows through there this week and recovered. This is another market which has tested the previous lows and below the previous bar's low and recovered back at that level. It had the opportunity to move lower. It didn't take that opportunity. And that usually means something. It may not be obvious straight away, but you keep that in the back of your mind, knowing that the opportunity was present for the market to break down, and the market didn't do so. So there's sufficient buying support in the market, at least up until this point in time, to maintain price at this level. And volumes have been fairly reasonable over the last 3 weeks. It's not as though it was all on really low holiday affected volumes. Decent volumes gone through down here, and the market's rejected moving lower. So keep that in the back of your mind. I think price will probably move a little higher this week, possibly just up to this bar's high before testing for supply, and then possibly moving higher up to the highs of the range if trading conditions still remain positive. Just back to the parent index quickly. This market was a little weaker, mostly due to the financial sector, but it traded within the range of the previous bar all week on pretty good volume, average volume, genuine trading, closing positively, up closer to the week's high and its low. So what supply has been drawn out has been absorbed by the market this week, and that suggests the market would like to go higher overall, being held back by the financials to some degree. So we'll need them to move. Highs of the range come through here, lows through there. This is where price broke down, pretty much dragged down by the financial sector. I think the market may attempt to move higher next week. It may break out above this bar's high and up towards the highs of the range. But we'll see how that goes. It will require the broader markets and overseas markets to be trading relatively favourably. If they're showing weakness, it's more likely then you would get a secondary test for supply like this. But I think that the markets may move higher next week, albeit tentatively. Okay, thanks for your time. Back again next week. See ya.